Did you notice how differently the market treated companies this week? Samsung reported strong results and still got punished. Micron announced a massive investment plan and investors rewarded it. SK Hynix continued attracting strong investor demand because of its position in the AI memory market. Rivian gave investors good news and stock still fell. And one of the most important AI stories of the week came from a chemicals company called Element Solutions. At first glance, these stories have nothing to do with each other. Different industries, different companies, different headlines. But when you put them side by side, they all point to the same thing. So this week, I went through these stories one by one to understand what the market was actually rewarding. And by the end of this week, one message became very clear. The market is no longer rewarding growth the way it did a year ago. And in this video, I am about to show you what I mean by that. Before we start, I want you to do me a favor. I am a relatively small channel, and my purpose is to help investors to see the real message of the financial markets. So if you are enjoying my weekly breakdowns, I would really appreciate if you can subscribe to my channel and like this video. So let's begin. I'm gonna start with Samsung. Samsung reported strong results this week. Their profits were solid, demand was healthy, and on paper it looked like exactly the type of report investors usually like to see. But yet the stock struggled. Now compare that with Micron. So this week Micron announced plans to invest more than $250 billion into US manufacturing over the coming years. That's an enormous amount of money. And instead of worrying about the spending, investors rewarded the stock. Just think about what the market is saying here. Samsung showed investors what it had already achieved, and Micron showed investors what it was preparing to build. The market preferred the second story. That tells me investors are becoming increasingly focused on the future capacity, not just current performance. And that brings us to next story, SK Hynix. If you don't follow semiconductors closely, here is why this company matters. Everybody talks about Nvidia when they talk about AI, but Nvidia chips don't work alone. AI systems process enormous amount of data every second. That data has to be stored, moved, and accessed at incredibly high speeds. So that's where high bandwidth memory, so-called HBM, comes in. HBM has become one of the most important technologies in modern AI systems because it allows processors to access massive amounts of data much faster than traditional memory. And as AI models become larger and more demanding, the need for that memory keeps growing. SK Hynix is one of the biggest supplier of high bandwidth memory in the world. SK Hynix is helping supply one of the critical components that makes those models possible. And that's exactly why strong investor demand for SK Hynix caught my attention. The AI trade isn't disappearing, it's moving deeper into the supply chain. Now let's move to what might be the most overlooked story of the week. That is Element Solutions. Element Solutions produces specialty chemicals and materials used in electronics manufacturing. That includes products used in semiconductor packaging, circuit boards, and advanced electronic components. This company is not exactly the type of company that gets discussed on financial television every day. And that is the reason why I find this story so interesting. This week, Solstice Advanced Materials announced $14.5 billion deal to acquire Element Solutions. And I think many investors are looking at this the wrong way, because this isn't really chemical story. It is an AI infrastructure story. So people talk about AI as if it is mostly software, but it's not. It is factories, it is semiconductors, it's memory, it's cooling systems, it's electrical infrastructure, it's power generation. It is materials and chemicals that most investors never think about. Previously, the obvious AI trade was buying the companies selling the dream. The more interesting trade today is identifying the companies that make that dream physically possible. And that is where I think the market is starting to shift. And this brings us to the next topic, Rivian. For those of you who don't know the company, Rivian is an electrical vehicle manufacturer focused primarily on electric trucks and SUVs. It is often viewed as one of the Tesla's most serious competitors in the EV market. This week, Rivian actually gave investors some good news. The company raised its revenue outlook. Normally that's exactly what shareholders want to hear. But at the same time, Rivian announced a large share offering. The market looked past the improved outlook and focused on the dilution. And honestly, that reaction tells us a lot. A good company story is not automatically a good stock story. Those are two different things. A company can grow, a company can improve, a company can execute. But if shareholders keep getting diluted along the way, investors start asking tougher questions. The market isn't just asking whether a company can grow anymore. It is asking how that growth gets funded and whether shareholders actually benefit from it. And our final story is EasyJet. A private equity firm made a multi-billion-dollar move to acquire the airline. Now the interesting part isn't really the airline. The interesting part is who is buying it. Because private equity firms aren't chasing hype. They are not buying whatever happens to be trending this month. They are buying assets, they are buying cash flows. They are buying businesses they believe are worth more than what the public market currently thinks. And that tells us something very important. Some of the smartest pools of capital in the world are still looking for real economic value, not just exciting narratives. Now let's put all of these stories that I mentioned together. Samsung delivered strong results, but investors wanted more. Micron was rewarded for building future capacity. SK Hynix benefited because memory has become critical to AI expansion. Element Solutions showed how deep the AI supply chain really goes. Rivian reminded investors that growth alone is not enough. And private equity went looking for value in traditional businesses. Different industries, different headline, but the message is same. The market still likes AI. The market still likes opportunity. But that's no longer enough by itself. Investors want infrastructure, they want capacity, they want cash flow. They want a path from investment to actual economic value. The first phase of the AI trade was easy. Buy the obvious names, buy the companies everybody was talking about. But the next phase is harder. Because now you need to understand who supplies those companies. Who controls the critical parts of the supply chain, who has pricing power, and who can grow without constantly asking shareholders for more money. So that's where the market seems to be looking right now. And honestly, that's where I'm looking too. And I also wonder your opinion. Was there a story you think the market is completely missing? So share your thoughts in the comment section because I read every single one. And if you enjoyed this weekly breakdowns, don't forget to like and subscribe. I will see you in the next one.